Hello and welcome to another Monster Candle Trader video. Today we'll be taking a look at the US tech. As per usual, it is me, the Monster Candle Trader. I'm gonna do this at the start of the video, but like and subscribe if you like the content. I do live trades every day that the news allows me to do it and my setups allows me to do it. So if you're looking for something real and authentic, this is the place to be. So yesterday was CPI and I didn't trade yesterday. And then for today, the new schedule is, oh my word, there we go. The new schedule is no news. So I am anticipating a trade at the 950 macro, right? So this is the first presented FEG that is being formed. And I realize that I do a lot of rambling in the early parts of my video. And as I go along, I should be able to get better. So I am looking for the opening range gap midpoint, which is here, sitting exactly at these relative equal lows. And whenever you're looking for sell side, it is always amazing to see the market opens and immediately trades higher. And in this case, it trades above these relative equal highs, meaning that it's not only a run into like a gap, it's a run on stops, meaning that the idea for trading lower gets even more solidified for me. So I've taken the liberty to highlight the relative equal lows and the relative equal high here, along with the London range high that was taken out prior, and then the London range low was already taken out. I've also highlighted the previous the daily highs, the daily lows, because these are all draw the day in regards to liquidity. So there's a chance the market might want to run to these. And since my bias is for the sell side here, I'm anticipating that this aggressive run here is simply trapping traders into a turtle soup. So we're going to wait and see what happens moving forward from here. All right, so I have the first. I'm going to go ahead and remove the London annotation because it served its purpose. And what I'm going to do now is to highlight this as the first. Let me go ahead and put Wednesday. All right. I'm going to lock this. There we go. And now we just wait. Right. Now, I think this is a good opportunity to just show you how I generally approach the market. So as I mentioned in previous videos, first things first, I look at the economic calendar, and if there is no news on the day, I anticipate that the market is going to be a bit slower in regards to moving towards the areas of interest, which is these relative equal lows, the midpoint of the opening range gap, right? And because of that, I wait specifically for the 20 minutes macro that is normally forming at 950 before I start even looking to frame a trade. Right. So that's the first aspect of the market. Now, once I highlighted the bias, my entry mechanism is typically from an FEG, whether it be an inverted FEG or a standard FEG. And this is typically around the first presented FEG. So a high probability setup for me is that step one, depending on the day, so we're going to use this as an example. If it's a no news day, what we want to see happen is that the opening range is large enough to warrant the market running towards it. And if it's the case where I have like an overall bias for a sell, it is really nice that the opening range gap is in discount. So there is a lot of relative equal lows here. This relative equal high was taken out, so the next draw should be down here, and then the opening range gap is also down here. So that's another indicator for a high probability trade. The next indicator for a high probability trade is opening range gap is within the market range, right? So where the market is in proximity to where the first presented FEG is, it's really close by. So there's a high chance that I'll be able to use it for an entry, right? So just to reiterate, the areas of interest, which is relative equal lows, relative equal highs, the opening range gap also supports price going in that intended direction. the market opens away from the intended direction, which is a sell, and the first presented FEG is within the proximity of the market, right? And I went over in the other videos the key aspect that has been pretty much changed my overall trading approach, which is not only just to use the first presented FEG as an entry mechanism, but to use it as to tell a narrative. And this is if it happens in this video, I'll go over it. But that's just generally how I would approach a day like this, right? So right here, when I saw this happen, right? So there was one candle that took out this buy side as well. So let me go ahead and highlight it. Right? There we go. So there is this candle, one candle that took out this buy stop, right? If this candle would have overlaid over this candle, right, to cover up this entire range, this entire movement, forming an FEG, this would have created the Viper. Let me see if I can find a badass symbol of like a snake or something. Yeah, this is my Viper. Is there like a color change I can do? No, unfortunately not. Right? So if this was a single print of a candle that formed an FEG, this would have marked the Viper. And then because with the Viper setup, it is a high probability trade setup. So despite today, I would typically wait on the 20 minutes macro before attempting a trade. If the Viper actually formed, then I would have used it. So this is a failed Viper. All right, I'm going to go ahead and take stock of this inverted FEG right here. Right, and what I like to call this is the Lance Dance FEG, right? This is an FEG that ICT highlighted that the last FEG before a run on liquidity, the market tends to refer to it before making a move in price. So right here, you see the market close below it. There is a possibility that it wants to use it to take price into here. As I said before, even if these hyper premium arrays don't support price going lower, or the market doesn't offer an opportunity to use them to take a trade into these areas here, we still have the first presented FEG, so we're sitting pretty. And it's like 8 minutes to the macro. Love to see this. Absolutely love to see this. This right here is what you absolutely love to see. Immediately saw it, ran up and tap it to perfection. And look at that rejection from there. Go ahead and mark out this inverted as well. If it's going back to top here again, I'm going to look for an entry in here. Whenever the market is given these kinds of setup in regards to like the algorithm is just screaming out to you that, hey, this is a high probability setup. You don't want to ignore it. Look at this, perfectly tapping it twice. So if the market is to run and tap it one more time, it's probably going to dig even further into it and then takes off. All right, first trade attempt here. Let's see if it retraces back up into it. And it's 4 minutes to the macro, so please don't tell me this is what the... I don't want this on the screen. How do I X this off? Nice. Whew. I mean, I'm in the C trader because I will be looking to add on this. All right, so this is the first take profit hit. Unfortunately, there wasn't any kind of retracement before the market ran to there. Not into the first presented FEG, not even into the breaker. All right, thank you so much for tuning in. Like and subscribe if you like the video, and take care.